Okay, so the amazing thing is, right, you see, yes, we'll be introducing doubling theory today. Just introducing, you got to understand that everything is deeper than, what I make it seem to be. I try to explain in, a easy way for you to understand. Like for sure, like I give you the building blocks first, and then like after this video, you'll realize why. Oh, I had to learn this, and I had to learn this, and why I had to understand this, because literally, right? This is the thing that it would seem hard to a person that did not spend 6 months studying this, right? Literally, right? And it's something that would not make sense to anyone, but it will make sense to you, and you will understand because you already know the basics. And then you will literally understand that, wow, right? Sequential SMT was actually basic stuff. It was just one, two, three. Yes, it's building blocks. It's not something that, well, it is something you can use by itself, but it doesn't give you that, accuracy that, oh, I'm really going to be right now. Like, this is for sure. Which, I mean, I should say that, that's never the case, but sometimes it can be, right? Anyway, so first of all, you already know how we start. We'll be looking at the, scheduled movements that we have this week, right? So like it's month 6. We don't need to act like anything is random, right? We know that nothing is random, right? Right. And every week there's certain days and certain times that, price is scheduled to reverse even before the fact, right? So on Sunday, the, people that actually control everything, they know which day is going to be the high or the low of the week. Remember last week we said that, for example, we would have the index futures, go a bit higher. There will be some form of cracking correlation, right? And I'll explain to you why I had an idea that there would be a cracking correlation, which would send price low, which, that's the only thing that will allow price to drop. Doesn't matter, what you look at. That's the reason why price turns around. There's nothing else. There's no imbalance, right? Sequential SMT, intermarket sequential SMT, and both of them combined, which is, the base of doubling theory, is why price turns around, right? Literally, that's what it is. So, right, this week we're going to have a bit of volatility, of course. It is non-farm payroll week, and you already know the rules for a non-farm payroll week, right? Anyways, we'll go over it again. So Monday we have news events, right? Which means that Monday will be a tradable day, right? And you can see that it's right in the sweet spot between 9 and 10:30 a.m. right? Eastern Standard Time, of course. So we have a bit of volatility coming in tomorrow. Tuesday we have volatility at 10 a.m. Eastern Standard Time, which will be good for scalps. I think that Monday will be, better for a day trade than Tuesday. Wednesday, we have news at 8:15, and then we have news at 10 a.m. Eastern Standard Time, right? So you can see that this week is pretty full. Thursday, which, is my favorite day of the week to trade, right? Well, Wednesday and Thursday. I like all of them. I don't know. Well, we have news at 8:30 a.m., but that is the day before non-farm payroll. So, if you're even doing anything, it's not that, remember, it's not that there is a day that I should never be doing anything at all. It's just that there will be a lower probability of your trade, panning out, right? The drawn liquidity will be unclear, which it usually is the day before non-farm payroll, right? And on Friday, we have non-farm payroll, right? NFP. And, this will put a lot of, engineered liquidity into the marketplace. So this week will be filled with, a lot of excitement, a lot of volatility. So if there's any week that, you want to take to study live price action, to trade live price action, to, practice your risk management skills, which is very important. It's not just, I just want to trade it. Okay, you're going to risk 50% of your account, you win. Oh my God, I made so much money. Listen, you're going to do that again and lose, right? You're not going to win everything. Just understand that. So yes, this week will be jam-packed with excitement, right? So yeah, now we're going to look at the FX triad. Here you can see, right, in the order which we usually have them, right, USDX, then we have the euro, then we have the British pound, right? You can see that the high of the previous week was caused by what? Sequential SMT, right? A normal thing that usually happens. This is what we expected, right? It's priced to run above this high, a high, right? And fall back within the range, which is, pretty much what happened, right? And even when we did a live stream during the week, I believe, whereas we, explained why I would expect, price to go lower, which it did. And of course, we expected the same thing for the euro, right? So here you can see that we have, these clean highs for the euro, which, listen, I cannot, dismiss these highs right here, right? I expect, price to be gravitated to these highs. That's like what I'm looking for, at least this one, this week. So yeah, just giving you guys everything, like just straight off the bat, like, no, this is how it is, the thing that after, of course, after you have spent time, crafting your skill, right, you get to a level whereas you just see things like before, right? It's like, okay, there is no way I'm going to short right here, right? There's no way I'm going to long right here, right? I expect price to be drawn here. So if there is any sign of, SMT, sequential SMT, intermarket sequential SMT, then I will expect price to be drawn to this level, right? So it's not just, okay, I expect price to go here, but, I'm just going to randomly press a button. Randomly press buy. You're going to wait for price to, tell you that it needs to go there, because it doesn't have to, right? It does not have to. But there is a high probability that it will, right? Also, here you can see that the British pound, for some reason, has been extra bullish, right? So due to the fact that this has been like this, right, we'll be using the same concept that we learned last week in regards to the Dow, how the Dow pulls other assets into position, right? So the Dow usually gets out of sync, and then the S&P 500 and Nasdaq just follows, right? The same thing happens with the British pound, when you compare it to the euro and the dollar. Well, the dollar moves in inverse to the Great British pound, which you already understand. So yes, that's all I'll say right now about these assets. It's pretty straightforward, right? During the course of the week, you'll see sequential SMT, you'll see intermarket sequential SMT, and that will just point you into the direction, where price should be going, right? It's pretty simple. Price won't turn unless, that characteristic is there. Price will not reverse unless there is a cracking correlation. Okay, here right now, things begin to get, interesting. I am not sure if everyone can see this right here, so make it a bit brighter. Right, this fair value gap right here, right? So most of you guys know that, this is a weekly chart, right? We expected, price to, we expected this on the candle. This exact candle is what we expected, right? What did we expect? What were you expecting? Okay, so we expected, right, We expected price to fall and then rally on Friday. That's exactly what we expected. We expected Friday to close back within the range of the entire week, which you can see that here on this candle, which is the weekly candle, we had price open, trade up, right? Then, the low was made here, then price quickly rejected back into, the weekly range. The same thing happened here. Looking at the NASDAQ, and the same thing happened here. Now, right, what was a factor? What was one of the reasons why this happened? Okay, first of all, you look at the range, right? Right here, remember how we talked about mirror, premium, and discount, right? Everything, works together. So here we have price still being in premium. Here we have price still being in premium, but here price was in discount, right? Literally. We had price trade, down into discount, so below the 50% of the range, right? Here it did not. Here it did not, right? This right here, this candle right here, looking at the E-mini NASDAQ, S&P 500. Okay, let me use this. You can see what? That's a precision swing point, right? Okay, at the top, this candle right here, what is this? A precision swing point. Now do you understand the basis? Now, we're getting deeper right now, right? Now do you understand the basis of, where I have these lines anchored? Where are they anchored? They're anchored at precision swing points. So that's how you find the range that, will have the most probability in your hand, right? So again, the low here is anchored to what? A precision swing point. The high here is anchored to what? A precision swing point. You can see the low here, precision swing point, price rallied. The high here, precision swing point, price fell. Right? And why did price, not keep falling? That's due to the fact that in the Dow, we had price trade below the 50% of this range right here. You see, people understand this. Outside of us, no one will understand this, because even if you watch this once, you will definitely not get this, right? It takes time to go through your charts and see that this is actually there. Okay, now what's here? This was sequential SMT. This was SMT right here, which caused, price to fall here. But then, people say, okay, why didn't price just fall all the way down? There was sequential SMT. Why didn't it just drop and just continue going lower? Because of this, right? One asset already satisfied price itself, right? The engine of price, the algorithm which runs price, that's the Dow. It fell low enough for all of these, right? Here, we have, premium behaving as discount. And this is what happens whenever the Dow is in discount, right? If the Dow is in discount, the E-mini S&P or the NASDAQ is in premium, then this right here, this fair value gap right here will become what? A discount fair value gap, even though it's not in discount. And we'll explain this more. And again, this is literally basic. So, right, what do we expect now? Okay, so we can expect the Dow, right? Open, trade a bit lower, then, push up a bit. Same thing for everything else, right? Same thing for everything else, and we'll explain, this price action in more detail now. So here is literally right at the top. That is, what I used to introduce doubling theory to you, right? And no, it's not this easy. It's just that I explain it. I try to make it, a bit easier, right? So this was literally what? The high of the month. Okay, was this random? No. Right? So here, and if you guys remember, you can remember that, we talked about literally while price was here, we thought about price going here. And then when price was around here, we thought about price dropping and going here. When price was here, we talk about price, creating some type of cracking correlation here. And then we talk about price dropping lower, right? And what did we talk about as well? We talked about, Friday returning back into the range. Literally, that's what we wanted to see. We wanted to see Friday turn and go back into the range. So right here, you can see that we have sequential SMT plus intermarket sequential SMT. So this is the doubling aspect of cracking correlations, right? Right here, we have sequential SMT plus intermarket sequential SMT, right? So literally, why did we expect price to drop here? What did I expect? I expected this. I expected the sequential SMT and the intermarket sequential SMT. So it's not just one, it's both of them. And as you can see, after this happened, price just kept falling, right? This is why, and right, this is important. This is why here we had what? We had sequential SMT here, but price quickly, got drawn back to that low. Why? Because here we had the doubling aspect of the cracking correlations take place, right? It's very simple. Right here we have what? One cracking correlation was here. Here we have two, right? 2 is greater than 1. So the 2 will attempt to cancel out the 1, right? Why did we see price, draw back a bit higher and drop lower afterwards? And remember, this is not like everyone else just going and just blabbing about nonsense or, not knowing when price will turn around. We talked about this before it happened. We're doing it for 6 months now, right? So there's a hierarchy of, SMTs, which we'll talk about. And even, though you can see all of them here, which there are many more cracking correlations that we haven't even touched upon yet, which you will eventually learn, right? Which all have to do with time. Everything has to do with time. If it's not in line with time, then it doesn't make sense, and it will not make sense to you, because then the person will be like, oh, we'll do SMT everywhere. That wasn't real SMT, my friend. This is real SMT. So right here, to the left, what do we have? Sequential SMT plus intermarket sequential SMT. To the right, what do we have? Which caused the formation, if you can see, between these two intermarket sequential SMT are these two, doubled SMTs. Even right here, I don't write it right here, but right here we had hidden sequential SMT, right? So literally between these two doubling aspects, right? So is 1 SMT, 2 SMT, 3 SMT, and the other one, which was hidden sequential SMT, makes 4. So 2 plus 2, 4. No, you won't understand this. So literally 2 plus 2 is 4, and that's how you can, find higher the months. That's how, if you lower the cycle which you're working with, you can find higher the days and so on, right? This is how. But as someone who is new, you should just be focused on like the weekly cycle and the monthly cycle for now, until you understand it, till you grasp it. Another thing to understand is that you don't need to use 2 of them. Once you have sequential SMT and intermarket sequential SMT presenting itself at the same time, that's a doubling aspect right there of time, right? Literally, so time doubles here. Where there's a cracking correlation, yes, right? If it was just sequential SMT, which happened right here, it's going to be short-lived. When it's both of them, then you can expect explosive moves. Do you understand? You begin to understand, you watch it again, then you will understand if you don't, right? So literally, we had right here sequential SMT, price trades higher. Then we have sequential SMT plus intermarket sequential SMT, a doubling aspect right here. Then what happened? Price reverse. Okay, what makes this more quote unquote short? Where are we? We were here above what? Above the true open of the month. Okay, I think we were above the true open of the month right here. You see how everything comes together. Then here, where were we? Where were we here? Above the true open. Make sure they get it. Above the true open of the week. You see this right here, right? This line right here, just dotted gray line right here, very faded. Hopefully you can see it, right? This is the true open of the week. So we're above the monthly true open. Then we get above the weekly true open. Then what happened? This is the true mechanism of AMD. This is the true mechanism. This is the literal true mechanism of reversals. We don't have a fair value gap here. There's nothing here for price reverses. And it literally falls in line with the concepts that we use. But we managed to anticipate this happening. Right? Did we not? Of course we did. Price fell. Price returned here. There was a tracking correlation again. Then it fell again. Here we had what? Making the low of the month. What made the low of the month? Tell me. In the literal same thing that made the high of the month. Sequential SMT plus intermarket sequential SMT. You see, it wouldn't be perfect if it wasn't true. Right? So if you can't see the line, let me make it brighter. Should be able to see it now. Right, this red line. This is a true week open. We had here price, trading above the true week open, creating sequential SMT plus intermarket sequential SMT. You do not need higher time frame Peters. Not necessary. Right? You don't need them. Then what happened? Here again, tracking correlation again, price fell. Why did price return here? Like everyone was posting, oh my God, the S&P 500 exploded. It's Friday. That's what usually happens. When does it usually happen? But they just happens 50% of the time. When does it happen? 80 to 90% of the times. Whenever we have sequential SMT plus intermarket sequential SMT. In regards to the weekly cycle. Do you understand? Then what happened here as well? Like, where did this happen? It happened below the true month open. It happened below the true week open, which is actually way up here, which is why we had price stretch, right? We had price trying to return to it, tried to get as close to it as possible. Cause what? It was overextended. It tried to rebalance itself. Also, if you can, if you realize we have price using the, true month open as support. Here we had price using this true week open, right? Which is something else that you will learn, pulling the true week open from the previous week, right? So it will look like this. We have this true week open right here. And it's what is it? It's Sunday, right? You haven't started yet. And then here right? Which is on this candle. That's the 2-week open of the previous week. Right? So here, what happened? We had price using the previous week's true open as resistance. There was intermarket sequential SMT. You would be bearish here. Why? Why would you be bearish here? Because we already had sequential SMT and intermarket sequential SMT here. Once we have this right here, and it's supported, right? So while GU was trading above this high, we had price consolidating here, right? It went above the current 2-week open. And here we had a doubling aspect of time as well, where we pull the information from the previous week and use it with the information, which is the 2-week open from the current week. Price fell. Sequential SMT plus intermarket sequential SMT. Right? Very important. Why am I on UTC plus 3? You don't have to worry about that, right? We're using the same times, right? You should just focus on here, right? These areas. So yes, we will be back, this week on Wednesday, right? Where we will, go deeper into price action. I hope that you found something useful today, which you should have. You should have. Watch it again, right? We go deeper into price, and we're just like beginning. This is month 6. I need to understand this to understand everything that comes after. So doubling theory has to do with what? What's the base of it? Doubled cracking correlations. So there has to be different types of cracking correlations, and it's insane how well this stuff works, and you'll be amazed when you go through your charts and just see this thing over and over, just repeating itself. So yes, have a wonderful day. And this right here does not need an NDA because this is nothing. Seems like something to you, but can't just throw everything at you at once. Imagine I just threw this at you. Month 1, you'll be like, what is this? Doesn't make any sense, but makes sense to you now, doesn't it? All right. I hope that you have a wonderful day, and I will be back here Wednesday at 6 p.m. Eastern Standard Time.